Hey everyone, welcome to my very quick presentation on what is a CBDC, a central bank digital currency, and just a little bit of information around it. I went to a really interesting Bank of England webinar the other day, and I just want to pass on the information and bits and bobs that I learned, as well as my own sort of insights. So if we go into Wikipedia, we can see that it's a digital form of fiat money. So fiat money is just like your pounds, your dollars, anything, any kind of currency like that. It's digital form. And it's regarded as legal tender. That's the important thing, and it's issued by the state. Obviously, that's different from virtual currencies. A virtual currency could be thought of as if you put $10 into your favorite RPG game, for example, and you buy some new clothes for your mage or a new spell, that would be classed as a virtual currency. And a cryptocurrency would be one which is it's a digital asset which is on a decentralized ledger. So there's the differences there. If we take a little bit back in history with the traditional banking system, where you would make deposits into your bank, either through going there in person or through your wages. The benefits of having a bank account as opposed to just keeping the money yourself, it was deemed safe and secure. You'd get a bit of an interest rate paid for it, as well as you'd be able to link that bank account and card to this is talking about online payments to retailers, often through a third party, like for example PayPal, and things like that. So if I had, for example, a $10 bill in my hand right now and I was on Amazon.com, I wouldn't actually be able to use that $10 to actually directly pay for something. Whereas if it was in my bank account, then I would be able to through using something like PayPal or directly with a debit or credit card. So those are some of the benefits of why having a bank account used to be good. Then you have the turning point in 2008, where obviously we had the financial crisis, a bit of a crash in the housing market, a big loss of trust in banks and in the banking sector. And then it's also in the midst of all that is where we saw Bitcoin being created. Then we kind of move along a little bit to our current day situation, where people continue to lose that trust in banks. And as a further result, we've got a lot of privately offered cryptocurrencies trying to provide for different use cases. And again, as a result of this sort of lack of trust and a lot of the speculation and opportunity, which can definitely be seen when you look at the increase in value in something like Bitcoin, for example. It's caused a lot of capital outflows from bank deposits. So people taking money out of their bank and then putting it into speculative assets like Bitcoin, for example. As well as this, we can kind of see that there is a big move towards digital payments. So the use of cash has now fallen below 30%. This is based on the UK information. Somewhere like Sweden, for example, it's actually below 20%, and people already are referring to it as a cashless society, even though technically it's not actually quite there yet. But you can see through this chart and this example, as well as probably your everyday lives, that the use and the reliance and the dependency on cash is becoming a lot less. I can't remember the last time I went to a physical bank, or actually it's been a long time since I've even held any notes either. So what would be the benefits if a central bank was to offer a digital currency? what would be the benefits? First of all, we look at it from the bank side of things. So we've just seen over the last couple of slides that there's a change in the in the whole situation, the whole financial situation that we're looking at right now. And so there is a sense of adapt or die. If they keep their model based on fiat currencies and cash, which we can see is declining, and bank deposits in that sort of format, despite the dwindling demand, then you can only see there's likely to be more capital outflows into these other digital currencies, which are offering perhaps things which the standard banking system, just having a deposit in an account can't actually match now. So yeah, there is that aspect of adapt or die, and obviously they're not looking to die, so they need to do some adaptation there. Next point we got is the auditing monitoring. Again, if I've got my $10 in my hand, I've just drawn it out of my bank account. So as far as the bank's concerned, that's as far as that's all the information they know. They know that I've just taken some money out, and that's where the story ends for them. Whereas then I can then go and spend that on anything I want. I can give it to anyone I want, and go down the street and give it to a friend. And they're not going to know. They're not going to know the reason for it. They're not going to know, when that transaction happened. However, with CBDC, they will be able to know, because it'll be the same as if I made a transaction from my online bank account and I paid someone, a friend of mine. They're going to be able to see exactly when I did it and how much it was for. And sometimes even I think you can put like a reason as well, so they can see what the actual reason was for, depending on where you stand upon like transparency. Obviously from their side of things, it's a great thing because they can see where, the word, it's in the word, isn't it, transparent. They can see where everything is going. And some people will argue it's a form of control, but from their point of view, it's a definite benefit there. Third point is it's kind of counteracting the capital outflows that we've seen from the central bank deposits. We're going to, with them going into cryptocurrencies, by offering this alternative, they're actually kind of touch upon it in a bit later on, but it's almost like their answer to it. It's just like, because if people are going into cryptocurrencies with their money for all these other benefits, then by providing some of their own benefits, which I'll come on to for the customer in a second, then they can try and reverse, or at least slow down a little bit, some of the money flowing out to these other companies, and they can actually work with those companies to try and harness and keep some of that money within their own system. And I put there as well at the bottom a chance to reset. It's quite a vague term there, but if you've ever looked at the global debt clock, it's always going up, and you always hear about how every country is in so much debt. With the issuance of this, there is the possibility to try and reset some of that with a big old global financial reset. Let's carry on. So the benefits for the consumer, and credit goes to the Bank of England webinar as well, which has included a little graphic down there. Hopefully they don't mind that. So one of the first benefits was convertibility. So quite similarly to the example where I had a $10 bill and I couldn't convert if I had the $10 bill in my hand, there was no way that I could convert that into a product on Amazon without doing something else to it first, and that was depositing it into a bank account. With CBDC, you'd that concept is kind of like taken a step further in terms of if I had a CBDC of the United States, so like a digital, let's call it a digital dollar, there would, working with third-party providers, there could well be the facility for me to then change. I'm holding it like that as if I could hold something digital, but yeah, that you could change that US digital dollars into something, say for example, like gold, silver, other commodities, and there's even talk of doing it into other stocks, and obviously you could do it into other cryptocurrencies, which might be the bridge to allow that to happen with the different systems, but I won't go too much into that right now. Also, for the consumer, there's the potential for an interest rate, and this was something again touched upon by the Bank of England, who were asking essentially, like, would that be a something that would be of interest to make CBDC more attractive? And from my point of view, I think it's probably one of the main points. And in the poll that they ran, actually, it did come up as such, because, for example, you're getting no money in interest rate wise. If you're in America right now, like the interest rates are zero. Some countries are even minus. So therefore, if there was a cryptocurrency, for example, with a third-party provider who was offering up to 10% interest, obviously that's going to encourage capital outflows to that selected cryptocurrency and possible trading platform. Whereas if the CBDCs, if they start to offer a bit of interest rate, that can, first of all, it will twofold. It will slow the capital outflow to the various cryptocurrencies which are offering high amounts of interest, as well as, they might be able to match it, to be honest. Who knows? We'll see. But it also encourages anyone who is still on the fence or doesn't want to give up their the traditional money by doing this. I think it will also kind of like help the last people who want to make that transition across, because again, it's why would you hold on to an old asset which is gaining you just absolutely nothing, or if negative interest rates become a lot higher, or worldwide, because obviously it's in some countries right now, like Japan, I think, that creates the disincentive, to be holding those traditional deposits, and it will kind of like either force you, or, as I would say, incentivize you to move across. The other one would be health. So that's something that is probably going to be touted. Obviously, in the situation that we're all facing at the moment, the global, I'll just call it situation. Obviously, by having the CBDC, you're less working with physical notes and touching or close communication with people in close interactions. That was what I was looking for, and transactions, and therefore from that side of things, then there's less chance that you're going to be transmitting any kind of health negative things. Trying to dance around this subject without saying it. And then the last point there, I put in quotations, a bit sarky, but that is trusted, because it is issued by the central bank. Then therefore, it's going to be touted as being a trusted source, whereas a lot of these private currencies, cryptocurrencies that are offered, how can they be trusted? Because they're not state backed, and they're not backed by anything. Where is the value derived from is the argument from the central banks. So yeah, if we have a look, I'll just type this into Google, CBDC. Who's kind of looking at doing this? Is it new? I don't know. Well, a quick search shows you that pretty much every country that you can think of is doing it. Those three are brought up there. I think South Korea, yeah, Bank of England, and Deutsche Bank. Yeah, are all kind of at different various levels of it. My personal viewpoint is that they might be waiting a bit further for USA to make the full jump, and then everyone kind of follows. But if you're looking at timelines at the moment, it appears, if you read the articles and stuff, it seems like Sweden would be one of the first ones to make that jump and stuff due to their progress. But I still think it might be USA who come once they've got everything in place and stuff, kind of like almost give the green light to everyone else. I'm not sure if it really works like that, to be honest, but time will tell. This was me just covering a bit of the things that were going on in the world. So again, it's just linked up to that whole that banking is changing. You can see there that the fractional reserve has been removed. So the bank no longer, they used to have to keep a certain percentage of everyone's deposits in physical assets. So if they had, say, for example, one customer and they deposited 1 million and the fractional reserve was 10%, and they would need to hold 100,000 worth of actual physical assets to be able to pay that person out, if they needed to withdraw some funds or anything like that. But whereas that's just completely gone now. So it kind of like adds on to that fact of just like the rules and things which kind of like used to dictate and govern banks, things which help develop trust. They're just dwindling away as they write them out of policy. So it just goes to show that it's just, I don't know, it sort of feels a bit inevitable at this point. And then you can also see there, the US Treasury is moving to replace the Federal Reserve. So they would be behind the monetary policy and issuance of currency. So yeah, it seems like it's all kind of like lining up. Like the USA is slowly getting there, and it feels like other countries could have already been at this point. But yeah, like I say, I still think that the USA kind of is given or at least with the other major economic powers, they give the green light together, sort of thing, before. And you can also see there that the dollar is being printed into hyperinflation, which you probably already knew with the amounts of trillions they're now printing out. And I think this is my final one. Yeah, final little slider. It's kind of what it means going forward. And this is just kind of backing up some of the stuff that was said earlier on in terms of like, this is a direct quote from Tao Zhang. And he's the managing director at the IMF. And yeah, it says, this is a direct quote here, it's just saying that the CBDC could be a combatant against other digital assets and privately issued securities. So again, that's that thing about the money's going out right now into cryptocurrencies and things. And, they want to be able to, in a way, kind of pull what they can kind of back in. Obviously they're going to stay because those other ones are difficult to regulate and they could pose risks, financial risks and stuff. It just means that they're losing money, really. But and then an interesting point at the bottom there was about this small s CBDC. I don't know how you'd differentiate that. So, and I think this is going to be where it goes, and that's private sectors working with central banks to issue the fully backed coins with central bank reserves. Sorry, I lost my train of thought there. But yeah, under the full supervision and authority of the central bank. So it's almost saying like we'll either issue our own currencies completely off our own back, or we'll work with some private providers to do that and stuff. So we'll see how that pans out. But I think it's going to be that second option where they're working with the private sector to issue these coins, which are fully backed by central bank digital currency. I hope that covers what is a CBDC, and more so just like what's the situation around today that's kind of like brought it to the forefront, and kind of what does it mean going forward, and why are the banks doing it. Anyway, that was my first little insight video into it. I think if I ever do another one, I'm going to have to write a little bit more out and make it a bit more structured, to cover the points properly. I mean, this PowerPoint and knocked together, it didn't take too long, as you can tell. This formatting and stuff is terrible. Anyway, hope you enjoyed it. Ciao.